Hello, and welcome to another episode of the Markets at a Glance series. My name is Rufas Kamau, Markets Analyst at FX Pesa. So today we have quite a busy day. Remember, yesterday was Monday. We didn't have much activity happening in the markets. We had the Markets at a Glance series. Apologies for that. So we had the day for the elderly, which is a public holiday in Japan. So very low trading during the Asian session. And once we go to the London and of course the New York session, we didn't have much happening. So today we have had quite a sequence of news announcements that have resulted in some form of volatility. And these includes the monetary policy meeting minutes from the Reserve Bank of Australia. Then we had the inflation data coming from the Eurozone. And I think the most impactful news that we've had all day comes from Canada, and that is the CPI numbers. So let's try and understand what the CPI numbers mean. And once we cover this, then we'll know how to respond. Already the markets are moving. So I'll try to fast track this. So I know that for most of you, whenever you're looking at the economic calendar, you use quite a number of economic calendars. I think the most popular among you is basically the Forex Factory calendar. So if you're following these, then it can get a little bit confusing because for inflation, we are normally focused on the month-over-month CPI. Then from month-over-month, we normally look at the annual CPI, which is not reported here. We also look at the core CPI month-over-month and year-over-year. And so far, you can see different ones here with a median CPI, trim CPI, and common CPI, which might not make a lot of sense compared to other CPI reports. So for Canadian data, you might want to shift rather than use the Forex Factory economic calendar. You might want to use the one that is presented by tradingeconomics.com. So nevertheless, if you want the real raw data, you can click on this particular icon here and then go to the latest release. And this will direct you to the website from Canada that basically releases this. So it's Statistics Canada. So from this website, you'll be able to consume the raw data and read everything there is about that data release. So from here, you can see that the consumer price index rose 4% year over year in August, following a 3.3% increase in July. So if you go back here to the economic calendar and then you check, you can't see 4% anywhere. So it can be a little bit confusing. So you would rather, if you have the time, go and read the actual report. But then if you just want the summary, then you can also use the trading economics calendar. So from here, you can see inflation rate year over year moved from 3.3% in the previous reading to 4%, but has an expectation of 3.8%. So this is a big jump in inflation. It's the second consecutive month that inflation is rising in Canada. And this is becoming a major problem. So we know that the central banks have been fighting to drop inflation towards their target. For Canada, it's 2%. And the way they have been doing this is by hiking interest rates. So now that inflation is on the rise again for two consecutive months, it means that the Bank of Canada may have to go back to the drawing board and decide whether to continue hiking interest rates, hold interest rates level at the current level, but I don't think they'll be considering cutting interest rates anytime soon. So if you look at the month-over-month change, in the previous reading, there was an increase of 0.3%. Then in this reading, we had a forecast of 0.3. Previous was 0.6, but the actual outcome was an increase of 0.4. So 0.4% was way better than the expected or the forecast number. So with inflation month over month rising higher than expected, then we are seeing the big jump in the year-over-year number. Then for core inflation, which is basically a basket of goods without the volatile prices of food and energy, then in this case, the previous number was 3.2%. It increased to 3.3%, though it missed the expectation of 3.5%. So it means that inflation is still rising, but not as fast as expected, but still something to consider. So core inflation month over month increased 0.1% compared to the previous increase of 0.5%. and a forecast of 0.3%, which basically means that our core inflation is not increasing as much. So we know that a majority of this inflation is coming from rising energy costs. So when you see oil prices rising, then they affect the inflation number, and the core inflation number does not include energy prices. So that may explain why we are seeing a smaller increase here. So median year over year, 4.1%, and trimmed year over year, 3.9%. So knowing what we know, now if we dive down into the data, try to understand more, you can see that the key highlight here from the report from Statistics Canada is that gasoline prices increased year over year, the first year again since January 2023. So the energy or gasoline prices have been reducing, but now year over year they are up 0.8%, and this is becoming a worrying problem. So the first year increase since January 2023 after falling 12.9% in July. So the year over year gain in the gasoline index was partly driven by a base year effect, as prices fell 9.6% month over month in August 2022. So resulting from higher global oil production and lower refining margins. So on a monthly basis, gasoline prices rose 4.6%, also contributing to the year-over-year increase in August 2023. So the month-over-month gain was mainly the result of higher prices for crude oil, following production cuts from major oil-producing countries, and we all know that this is Saudi Arabia as well as Russia cutting their oil output. So shelter prices are also accelerating, led by rent. So shelter prices were up 6% on an year-over-year basis in August after increasing 5.1% in July. So faster growth in shelter prices was led by the rent index, which rose 6.5% year over year nationally after a 5.5% gain in the month of July, which is just 1 month before last month. So after other factors, a higher interest rate environment, which may create barriers to home ownership, put upward pressure on the index, where rent prices accelerated in 8 provinces. Those with the fastest price growth were Newfoundland and Labrador. So here we saw 8.4% increase in rent, Alberta 6.5%, Nova Scotia 9.5%, and Manitoba 6.1%. So clearly, those are the two leading factors that are contributing to high inflation in Canada. On one side, gasoline prices, and on the second side, rental prices. So price growth for groceries slows but remains elevated. And of course, I'll be sharing a link to the report. So if you want to take your time and go through it yourself, then you'll have the link available. So hi, Sports Corner, I can see Richie, Charlie Genius, and Apollo. Why should oil rally affect Canada inflation being a major producer and exporter? So when we talk about Canada being a major exporter, it's basically the corporations in Canada that are basically export oil. But then when countries are buying oil from Canada, they basically buy the Canadian dollar first and then use the Canadian dollar to buy the oil. So as a result, higher demand in oil basically creates a higher demand in Canadian dollar, and that may explain the strengthening of the Canadian dollar as we saw the strengthening of the oil prices. So today you can see that it has been a straight line movement for USDCAD. The dollar has been consistently losing to the Canadian dollar, and our target level was 1.33862. I remember mentioning this morning during the market snapshot series that this was a major resistance, turned support, and now support again. So for anyone who was participating in the market, then this was a pretty good exit point, and I don't think there's any need to be greedy. So the key highlight for the day, and I remember highlighting this early in the morning, was that we had a key breakout happening in in CAD JPY pair. So if I zoom out here, you will see that this was a major resistance level. So price managed to break above this level earlier this morning. And after breaking above here, we have only seen a straightforward, straight up movement in CAD JPY prices. So if you move to a forward chart, you notice that we are headed to a previous high that was last seen a couple of months ago. This was in October. So now the price is approaching this previous high. And if I go to a daily chart, then try to zoom here, you'll notice what was happening here. So this was the major resistance, and the other resistance is right nearby, just around here. So we are looking at 110.704. So now that we are seeing a very strong momentum in price, currently at 110.38, I think the maximum we are getting is 110.704 without getting reasonably greedy for anyone who is buying the Canadian dollar as a result of the two data points that are fundamentally driving the Canadian dollar to be stronger. So technical wise, we know that this was a very strong consolidation pattern. So now we are enjoying the breakout of this pattern on the forward chart. So the breakout happened here and the market accelerated higher. Then there's this resistance, market breaks this resistance and heads to the previous high. We have already hit the previous high, and there's that opportunity that we could see yet another previous high. So we have already broken the previous high here. We are almost breaking this one. And now the ultimate high is just around the corner. And this is the highest that we have seen in quite a period of time, 110.704. So there is a good chance that we'll be seeing some further upside. And of course, this is quite a continuation pattern. If you know of a cup and a handle trading pattern, then this is just it happening on a daily time frame. So if this is considered as your cup and this is considered as the handle, then we know it's a continuation pattern and the market is about to break and move even higher. So I don't think there's any other significant trade you might be wanting to consider compared to trading the strength of the Canadian dollar, which is backed by two things. One, inflation is on the rise again. Recently rose to 4% in the month of August. And as a result of that, we might be seeing more pressure on the Bank of Canada to go for another interest rate hike, which would be positive for the Canadian dollar. And of course, the oil markets are basically tightening further. The suppliers, major suppliers such as the OPEC, Saudi Arabia, and Russia, they are extending their oil output cuts. And by doing so, they are basically pushing oil prices higher. On the other hand, if you look at economies like China, they are stimulating their economies so that they can resume strong recovery. And as a result of this, we should be seeing increased demand while supply is being limited, which is very bullish for oil prices. So looking at US oil, you're seeing a very strong momentum here. So even though I was expecting some form of consolidation, the last 2 hours are basically a clean break. So if you go further back on my charts here, then we look at Brent oil prices, then we should be able to observe the strong momentum. So I remember highlighting this early in the morning, that this is the triangle that oil price is trading. So this triangle basically implies consolidation. And then in the last 2 hours, it's a clean break, meaning that oil prices are accelerating higher. So from 94.08 to 94.82 in the last 2 hours, and we expect even further upside momentum. So if you use a longer term time frame to try and understand the next target, then it's basically $97.7 per barrel, which is quite a distant. So there's still more room for Brent oil prices to keep on rising. So two potential trades are bet on the strength of the Canadian dollar, and of course a bet on the strength of Brent oil as well as US oil would suffice for the day, and hopefully you'll be able to enjoy trading the New York session. So for US equity indices, I don't think we have much. As I had mentioned, yesterday it was a lot of sideways momentum. So now, if you look at the US 30, it's retesting yesterday's low. And of course, Friday's low is also around the same level. So if you look at the highlighted yellow rectangle here, we don't have a clean break yet. So it's more of a sideways momentum unless there's a clean break and the market crosses way below that. So as for now, I expect the market to remain within sideways momentum, since the most anticipated news for the US is the FOMC press conference and interest rate decision tomorrow. So today might not be a very active day for trading US equity indices. So yes, there was a sharp sell-off here in the last 2 hours for S&P 500, but yet it's very clear that the market is just retesting here. So unless there's a very straightforward and clean break, right now I wouldn't be interested. And of course, for the NASDAQ, you can see it's a sideways momentum for like 48 hours. So unless there's a clean break downwards, I expect the market to maintain this formation until tomorrow. So majors are making a comeback against the dollar. So you can see the Australian dollar, how it rallied early this morning, found resistance on the previous high, that is 5 days high. So now you observe that level. As for gold, strong rally against the dollar. So almost retesting the 1938 price level before pulling back down. So Euro USD making quite a good rally, got to 1.07180 and is now pulling back downwards. Then pound USD also making a very strong rally after breaking from this particular wedge, and now it seems to be pulling back downwards. And of course, for the dollar index, it's making a recovery after the big sell-off in the morning. So we expect this kind of play in the markets whenever we're expecting major news tomorrow. Market going up and then sharply down and then sharply back upwards. So these kind of games tend to happen a lot, basically showing indecision in the markets until something basically provides a clear direction for market traders. So we saw the market going up for USDN and then back down and then up. So we don't have much of a direction unless you're trading the Canadian dollar or oil prices. Otherwise, other markets seems to be moving up and down and up until we get to the major news for the week. So that's it for the day. I will be checking to see if you guys have any questions. If I recall correctly, Bank of Canada had indicated end of rate hikes, and appears inflation is becoming a global problem and central banks are reluctant to hike rates. So I would say that there are 3 central banks that have already completed the cycle. One is the Bank of Canada, second one is the Reserve Bank of New Zealand, and of course, the Reserve Bank of Australia. So all the 3 banks had reached a certain level where they felt that the rate hikes were significant enough to stop inflation and get it to the right level. But then a couple of weeks down the line, they made a complete U-turn. So after realizing that inflation is on the rise again and the economies are completely strong, the job market is very tight, they made a U-turn on their policy and they decided that they are going to continue to do whatever it takes until they get the inflation back to the 2% target. So while we may follow the central bank mandates and what they're trying to tell us, we also understand that they have a constitutional mandate to make sure that there is stability of prices. So they cannot afford to give up on inflation and say that we have done our job, now we wait for the economy to react. So as long as inflation keeps on rising and they have a model that they are working with, then they may have to push interest rates a notch higher until prices come back downwards. So that's quite a challenge that they are currently facing, and we could be seeing some central banks coming back and deciding to continue hiking interest rates higher, and this could basically strengthen their respective currencies. So hello, Peter Samuel. Thank you for joining the session. So as we approach the end of the day, I don't think we have much remaining. So we already have some new data coming in at 3:30. So we had the building permits in the US coming in at 1.543 million, way higher than expected. Then housing starts slowing down, which is basically confusing. So building permits were issued were higher, but then the number of houses that were began construction in the last 1 month was going down. Building permits month-over-month preliminary, up 6.9%. And of course, housing starts 1.283, which is basically the number reflecting the percentage here. So it basically shows that housing starts are slowing down, but building permits are increasing, meaning that there is optimism about the future. So people who are applying for building permits are looking to begin construction in the near future. So if they get more permits, then we expect higher construction in the coming weeks. And in that case, we could be seeing the US construction sector basically starting to fix the real estate problems or the imbalance between demand and supply for residential housing. So for the rest of the day, I don't think we have much. We have Bank of Canada Kozicki speech. This will be happening at 9 p.m. Then for Argentina, we'll be getting the GDP growth rate quarter over quarter, growth rate year over year. This will be at 10 p.m. Then API crude oil stock change. This will be released at 11:30 p.m. just before midnight. So we're looking into tomorrow early in the morning. I don't think we have much happening. So in terms of major news announcement, I think the loan prime rate for China will be the key move of the market. It will be happening at 4:15 a.m. So if China decides to change interest rates, then this could have a substantial impact on the Australian dollar, the New Zealand dollar, as well as oil prices. So later on at 9 a.m., we'll be looking at inflation data coming from the UK. So the overall reading was 6.8% in the previous reading. So we're expecting that this inflation could rise to 7.1%. So a rise in inflation would be positive for the GBP. So make sure that you are prepared for the data announcement. And of course, later on in the day, the most important news for the day will be the FOMC press conference, as well as the interest rate decision, where we expect that the Fed will hold interest rates at the current level of 5.5%. So thank you very much, guys, and I hope to see you on the next one.